Amidst the noise and tumult coming out of the White House this week, including the crazy tweets about Amazon and Mexico, let's be honest, on one big fundamental point, Donald Trump is right. China is a trade cheat. Many of the administration's economic documents have been laughably sketchy and amateurish, but the U.S. Trade Representative's report to Congress on China's compliance with global trading rules is an exception worth reading. In measured prose and great detail, it lays out the many ways that China has failed to enact promised economic reforms, backtracked on others, and used formal and informal means to block foreign firms from competing in China's market, all of which directly contradicts Beijing's commitments when it joined the World Trade Organization in 2001. Washington approached China's entry into the world trading system no differently than with other countries that joined in the mid-20th century. As countries were admitted into the system, the free world, especially the U.S., opened up its markets to the new entrants, and those countries in turn lowered barriers to their markets. That's how it went with nations such as Japan and South Korea. But there were two notable factors about these countries. They were relatively small compared with the size of the global economy, and they also lived under the American security umbrella. Both factors meant that Washington and the West had leverage over new entrants. South Korea had 30 million people and a GDP of 41 billion when it joined the GATT, the precursor to the WTO. Japan was larger with 90 million people and a GDP of under 800 billion. And then came China with 1.3 billion people and a GDP of 2.4 trillion when it joined the WTO in 2001. The Chinese seemed to recognize that once they were in the system, the size of their market would ensure that every country would vie for access, and that this would give them the ability to cheat without much fear of reprisal. The scale and speed of China's integration into the world trading system was a seismic event. Economist David Autor has studied the impact of the so-called China shock and concludes that about a quarter of all manufacturing jobs lost in America between 1990 and 2007 could be explained by the deluge of Chinese imports. Nothing on this scale has happened before. Look at the Chinese economy today. It has managed to block or curb the world's most advanced and successful technology companies, from Google to Facebook to Amazon. Foreign banks often have to operate with local partners who add zero value. It's essentially a tax on foreign companies. Foreign manufacturers are forced to share their technology with local partners who then systematically reverse engineer some of the same products and compete against their partners. And then there is cyber theft. The most extensive cyber warfare waged by a foreign power against the United States is not done by Russia, but by China. The targets are American companies whose secrets and intellectual property are then shared with Chinese competitors. The Trump administration may not have chosen the wisest course forward, focusing on steel, slapping on tariffs, alienating key allies, working outside the WTO, but its frustration is understandable. Previous administrations exerted pressure privately, worked within the system, and tried to get allies on board, all with limited results. Getting tough on China is a case where I'm willing to give Trump's unconventional methods a try. Nothing else has really worked. You heard what I had to say. Now let's hear from someone who is an actual expert who played a central role in China's entry into the world trading system. Larry Summers was the 71st Treasury Secretary of the United States, serving under President Clinton. He headed the National Economic Council for President Obama. He has also been president of Harvard University. Welcome back, Larry.
Good to be with you, Fareed.
So, isn't it fair to say that China has been taking advantage of the world trading system, been mercantilist, been protectionist, favored its own companies? Isn't that basic critique right?
I think there's some truth in it. Certainly there are rules in China that I'd very much like to see changed. But if you ask, have we benefited enormously from trade with China? The answer is yes. America, we always talk about the real wages of American workers. All kinds of products are at much lower prices. And that raises the spending power of American workers because of our ability to trade with China.
But
large numbers of jobs have been created because of the opportunity to export to China. We have, with all the problems, had a much healthier diplomatic relationship with China because of the tremendous integration that has come because of trade. So the right way for us to be dealing with this is through global institutions, acting globally, because the kinds of issues that are legitimate are issues that the Europeans have, are issues that people in other parts of Asia have, and that's the approach we should be taking to China, not an approach of discarding all the world's mechanisms for dealing with trade disputes and making our own unilateral threats.
But people say those things take too long. They won't get the Chinese attention. These kinds of things have been tried in the past.
Well, don't be confused. China had a global trade surplus of 10%, nearly 10% of GDP. They were exporting far, far more than they were importing 5 years ago. The world said that was a problem, and that trade surplus is down by more than 80%. The world said China had the wrong currency. China has spent $1 trillion propping up its currency. Does that mean there are no problems left? Of course not. There are plenty of problems that need to be addressed. But the right way to address them is with the rest of the world having our back, rather than driving the rest of the world to be on China's side, which makes it so much easier for China to resist us. We have no evidence that this strategy as yet is going to produce results. What we know is that the tariffs that China is likely to impose will cost jobs of people who would otherwise have been involved in exporting to China. And probably even more important, what we know is that we're shooting ourselves in the foot because what China sells are inputs to American producers, steel, for example. And when those input prices go up for America, and they don't go up for the rest of the world because we're taking a unilateral approach, the American producers are all at a disadvantage all over the world. So this is a strategy that you see it in the reactions in the markets that is hurting American producers in toto and reducing their prospects, and ultimately will reduce American jobs as well as profits. So yes, let's address world problems, but let's not do it alone with threats that we're already backing off of only a few days after having issued them.
I got to ask you before I let you go about another stock market related thing. The President of the United States going after Amazon. First of all, is he right on the substance? And what do you think of the President singling out a company like Amazon as he has done with others in the past?
Look, whenever a company is as large as Amazon, antitrust authorities should be paying attention. I have no reason to think that there's been an abuse, but I certainly haven't done an investigation, and it's certainly the job to look for predatory pricing, to look for a variety of kinds of misbehavior. I have no evidence that those exist, but I have no proof that they do not exist. That's the job of serious technocrats to investigate. What is not the job of the President of the United States is to go on a jihad against a company because he does not like the activities of a newspaper that is privately owned by its CEO. That is the kind of thing that happened in Mussolini's Italy. That is the kind of thing that happens in totalitarian countries. That is not the kind of thing that happens in the American democracy. And it is something that should be deeply concerning to business people everywhere, because one company can be singled out at one moment and another company can be singled out at another moment. The essence of the most successful countries in the world economically, almost without exception, is that they are governed by the rule of law. And if you look at the less successful companies, they are governed by the rule of deals. Who can make a deal with who's ever in power at a particular moment? And perhaps the most distressing long-run economic trend of the Trump administration is the shift in approach from the rule of law to the rule of deals. And that's what's behind this Amazon attack. That's what's behind a variety of the ad hoc tweets with respect to particular companies. And I think over time, that's a very serious thing.
Larry Summers, pleasure to have you on, as always.
Good to be with you.